Hey everyone, thanks for joining us again on the Tax Rep Network podcast. I'm Eric Green, as always, and I have a really special guest on, and and I'm very excited about this because we're going to be doing actually a special program on a Saturday, September 27th. Yes, if the accountants are listening to this, they're thinking Saturday. Yeah, Saturday. Why? Because we're calling all entrepreneurs, independent contractors, and frankly, their tax pros too should join us. What we're going to be doing is getting into S-Corps and how these are just a huge savings vehicle. So, anyway, my special guest, I am joined by my friend Danielle Meoli. If you don't follow Danielle online, you should. Aside from just being a great speaker and a great friend and honestly a wonderful coach, which is kind of how I use her. When I'm like up to here, I can call Danielle, who will kind of get me back to ground. But she's a serial entrepreneur and has been through as many highs and lows as anybody. So Danielle, listen, thanks for taking the time. I know you've been traveling a lot, so this is great.
Yes. Super excited to be here. We are in Charleston, South Carolina, actually Johns Island, and is where we are now living, and couldn't be more excited to be here. So glad we were able to connect and looking to bring some real value to all of the listeners today.
Yeah, no, and so just as some background, you know, we've both Danielle and I have independently we've been getting a lot of questions, tax savings, S corps in particular. There's a lot of interest now, Danielle, about this because of the one big beautiful bill. Um,
Yes.
you'll see a lot of commentary, and what they're saying is, well, tax planning is back. What they mean is, and for those people listening, um, the tax code was written by the wealthy for the wealthy. The founders of this country were all wealthy. All
Mhm.
right. Our code is written for business owners, not W-2 employees. So between that, with the new bill and all the, I think, opportunities there are for people to try to figure out how to maximize the benefits that have been kind of thrown out there to business owners, you have a lot more people now interested in this. I hate the term side hustle. The side hustle
Right.
is starting something to see if it works. Once it works, it's not a side hustle anymore. It's a business. But a lot more people, whether they mean to or not, are becoming entrepreneurs with the shifting economy. And I think that's why there's just a lot more interest in this.
There is, and when COVID hit, and all of the people that I know, I built all over the world online. But when COVID hit, I have to say, Eric, many people who were doing face-to-face business were forced to learn how to make money online, and I watched my business actually grow during COVID
Mine too.
because I was already an online entrepreneur. There's times, and you can hear my voice a little raspy now. I don't normally sound like this, but there's times where I'm on a call late at night working with people in Taiwan, Hong Kong, right? And then in the morning, I'm up talking to people on the East Coast, West Coast, building a business. And even though my main love in life and passion is helping people form a victory mindset, which helps them as entrepreneurs to produce the perseverance and the characteristics, right? So they can continue to go down the road and take those hits and get back up and realize their dream. What I have learned that I think is so important is when COVID hit and people were forced to go online, now people are like, the blessing that came out of it was they were forced to learn a new skill. And the new skill was that everything really is e-commerce. People are learning that if they just like a lipstick and they can get an affiliate link, they can make money. Or they find a product that they love and they tell the world about it properly, they can make money. And so many people who didn't know or understand what I did for a living, they just watched me, grow over the years and have success. To like, I'm doing what you're doing. I'm just doing it with a different company and a different product or service. And I'm like, yes, but here's what I left so much money on the table. And Eric, you have shown us, myself, my husband, and my family, that over the years, being an LLC was great, but I didn't understand S Corp. I didn't grow up in a family that was savvy with this stuff. I am a self-made girl and I have had to learn from great coaches, but I never really delved into what can I be doing better than what my accountant was teaching me, which wasn't much. He's a great guy and he just did his job, but I didn't know the savvy stuff. And I started to surround myself with really successful people going, Danielle, you're leaving money on the table. Danielle, there are ways to take advantage of great opportunities, and you should be really paying someone to help you take advantage and set yourself up to then take the money that you save and go put it in real estate. Go diversify yourself. And I started to realize that I just wasn't savvy and I needed a coach. And guess what? What do I sell? Coaching. But I needed a coach like you. And that has set our family up for success. And now I'm passionate to say to people, you have got to learn how easy it is when you have the right coach like Eric to do something great for yourself as an entrepreneur, as a 1099 independent contractor, get it done. So I want to jump in and ask you, Eric,
Yep.
how does this all work? Because everyone I know that's going to watch this is going to go, Danielle, just tell me how it works. I got to get back to work.
Yeah. So an S corp,
Oh, you got it. There you go.
yeah, an S corp is a type of entity. So originally we had C corporations. They started with the mariners who went out from Britain. You know, they have a tendency to die, sometimes out on the ocean in a little wooden
Right.
tin box there. And so basically it was designed to protect the shareholders from these lawsuits, liability protection. An S corp is a pass-through. So normally a C corporation, you've got entity level tax, and then you have a
Sure.
dividend out, and the owners pay tax. The S corp flows right through. An LLC, very similar. The difference is an LLC is disregarded, is the term for taxes. So as an owner, it's all your income. You pay federal income tax. If you're in a state that has state income tax, you pay state income tax.
Right.
But then there's this Social Security and Medicare, what we call self-employment tax. For those people who've become independent contractors and make money, that's usually a rude awakening. When you get your return and you're like, what the hell is that? There's like a whole other tax line.
Yes.
Right? There's an old McDonald's commercial where the kid gets his first job and his dad's like, "You won't be needing your allowance anymore." And he gets his first paycheck and he's like, "Who's FICA and who said he could take my money?" Right? That
Right.
so what self-employment tax is, it's both sides of FICA. You're now self-employed, which means you're the employer and employee, so you get to pay both. Congratulations. Um, and that usually is a rude awakening. It's why the self-employed pay the most taxes of anyone. So, what is this S Corp idea? Like you said, let's boil this thing down. Well, an S Corp, it flows through. An S Corp cannot be self-employed by definition. It's an entity. And you're
Right.
a human. It's not the same. Well, where the case law comes out on this, and the IRS says you have to, if you are somebody who owns an S Corp and you provide services to it, you need to take what's called reasonable compensation.
Yes.
Okay? Now, most people do not do this correctly because there's a real incentive to take very little compensation because you get all the tax savings from the flow through dividend. The IRS can get very aggressive the other way. If they come in and you haven't taken reasonable comp, they're going to try to argue as high as possible. You owe the tax, penalty, interest, all the
Right.
rest. So the key thing here is to make sure that you take reasonable comp. Okay. Um, Now, how do you do that? I'm sure that's the next question. All right, well, that sounds good. How do
Yeah.
you decide that? Who does this? Well, the rule is you're supposed to have, and we don't have to go through the case names, no one cares.
Sure.
But all the cases recently in the last 15 years all say the same thing. You need to have written documentation that justifies this reasonable comp. So, how do you do that? There is software that we use that runs reasonable comp, and you put in your information. And to give you an example, so I'm an attorney. So you'd say, all right, well, you're an attorney, New Haven, Connecticut, attorney, 40 hours. But no, when I do that, when I use the software, um, I spend 5 hours a week in partners meetings. I do admin work. I do marketing work. So it comes up with a blended rate. And all of a sudden it might say, well, as a lawyer, 200. But when you factor all that in, it might come down to 110, right?
Right.
So where the savings are, let's use an example. Let's say you have an independent contractor starts their consulting business, right? Or their coaching business, and they build it up because the biggest thing is go make money. But once you're making money, you don't want to pay the tax. So they build it up, and they make 150,000, let's say in 2025. If they were an S corp, and we can talk about how you do this, because if you already have an LLC, you're 90% of the way there.
Yes.
Um, they run the report. The report says, okay, reasonable compensation for a coach in the Northeast, region is 70,000. Meaning, if somebody hired you as a coach to work for them, what would they be expecting to pay as reasonable compensation for
Right.
somebody who does this? What that means is you would set up yourself on payroll for 70,000. The other 80 that would come, I mention this and people go, oh, I can't live on that. No, no, you're going to take the whole 150. It's my money. I'm taking all of it. What are you kidding me?
Right.
But 70 would be characterized as W-2. The rest come out as dividends. The other 80,000 dividends not subject to self-employment tax.
Which is huge. I want to make sure
Yeah.
everyone just heard that. All these years that I've been having it go through my LLC and I get hit for all of it, no one had ever taught me until my genius friend here came into my life and I started learning that there was reasonable compensation and that some of it was categorized as W-2, which meant a world of savings to my family. I just wanted to make sure everyone heard that. Keep going. It was great.
No, so the thing is, I know that I have the numbers because I literally just went through this with a client. And so they said, so wait a minute, I can save how much? Well, the 15.3% self-employment tax, it's 15.3 up to 168,000 and
Right.
2.9% above that. So at 150, it's going to come down to 70 for wages. The other 80 you're still going to take, but you save the 15.3%. So it's about $12,200 in savings year after year after year.
Right.
Now, what I told them, now they're all excited. Like, why didn't my accountant tell me about this? I said, do you sit and pay for your accountant for year-end planning and all that? They said, no, I just see him for my return. That's the
That's
relationship
why.
you have created. For the entrepreneurs and independent folks listening to this, you will get out of your accountant what you're willing to put into the relationship. I spend a lot of, and I'm a tax lawyer. I spend a lot of money on my Don Brolin on my CPAs because they are not overhead. They are trusted advisor. And when you understand
Yes.
they're sitting at the boardroom table with you, not reporting after the fact, like no offense to H&R Block, but H&R Block. Um, so the point is, and I said, look, here's what's going to happen though. For Social Security earnings, you're now only claiming 70. We just reduced your Social Security earnings. So what I would like you to do is, that 12,000 that we just saved you every year, I want you to call your financial person, set up a profit sharing plan for yourself, put it away. In 10 years, if the market returns the average 8% historically that it's done, and by the way, past results are no guarantee of future, whatever. But if it did that 8% on average, you would be sitting on $203,000 in your profit sharing plan that you would have paid in self-employment tax, hoping Social Security is going to be around in 10 or 15 years when you
Say
need
that
it.
again. 203,000. But again, if you don't have the coach, if you don't have the trusted advisor like I didn't, you never knew that you could leverage these amazing opportunities. And that to me is why I'm sitting here today. Taxes is not what I do for a living. However, I want to become the most savvy investor at this point in my life. I want to learn from my mistakes, and I am finding ways through someone like Eric on how to do so to set myself and my family up for great things.
Yeah, I mean, people always ask me, well, what do the wealthy do? First of all, I can tell you what they do. They've got advisors who will walk them through. Here's what and by the way, the really wealthy people I know aren't committing fraud. I mean, I know I'm wearing the shirt that's a jokester commit tax fraud, but they don't. They don't have to. There are so many opportunities just in the code to do it properly. All right. So, I mean, my wealthy folks downstate, Greenwich, Westport, whatever, where they're doing planning, S Corp is a no-brainer. They've done their estate plan. They've got all this, all of the basic stuff that anyone can do, they've done.
Right.
Now, do you have enough stock options that you can leverage and take loans and not take income like Elon and Jeff Bezos? Yeah, once you get to that level, there are more sophisticated planning opportunities. But most of my clients don't need that. I would say anyone earning under, $1 million, just do all the basic stuff. You could save 10, 20, 30, 40,000 a year. And then
Yes.
look, if you cross certain thresholds, by all means, there are private bankers and there are high-end estate planners, and they will be more than
Yes.
happy to take your money to save you even more. But just do the basic things that you need to. And the best part about this, we've got the written report. It matches what you've claimed as your wages, your reasonable comp. If an IRS audit, you would ask me about this, said, Eric, you said bulletproof for an audit. Are you really? Yes. Here's what, because I've done this now with the software, has been around for about 10 years. When I've handed that to an auditor, you know what they do? They flip through the report. It's based on 100 million data points. The IRS doesn't have better data than that. They
Right.
flip through it and they'll say, "Can I have a copy of this for my file, for the audit file?" Sure, by all means, I can print out as many as I want. Take it. That's the end. They're not going to challenge the compensation. How are they going to challenge it? They don't have anything better. We've just saved you a ton of money, and you can sleep at night because you're bulletproof.
It's
So
hugely important.
yeah,
Hugely important. So let me jump in and say this. What you said about, the people in Greenwich, et cetera, that's a whole different ball game. If anyone gets there, God bless, go get more. But this is the foundational stuff that I myself not only knew had to be done when I heard that I was leaving that much on the table. I mean, we'll talk about the potential savings in a second, but I just want for everyone that I've invited to this that doesn't know you to first, I want to just give them a little bit of who you are, Eric, so that they're not like, well, I got to go read up about Eric. But second, I want to say, foundationally, for those of you watching that are like me, you're like, Danielle, I just want to do it, but is this going to be a headache? Is this going to cost me a fortune? The answer is it's not a headache. It doesn't cost a fortune, and it puts you in a place where the savings is very significant in some cases. But what you just heard is a very similar thing that I've walked through, which is every year now that savings keep showing up. This isn't a one and done. So before I throw it to you on what does this look like and what kind of time people are going to have to put in, I just want to introduce who you are to my friends that are going to be watching. I know I'm going to have probably several thousand watch this, but Eric is a managing partner at Green and Sklar's. They have offices in Connecticut. That's where I'm from, and that's where I love saying that Connecticut and New York, where you have your offices, some of my favorite stomping grounds. Also, nationally renowned tax expert, very important, and that's why I hired him. One of the nation's best speakers in tax topics in tax education. If you haven't heard just now in this podcast, he's very laid back. He doesn't make it boring. He's a lot of fun to be around, but also he knows his stuff, has an incredible reputation in the industry. This one I thought was really special and it's very prestigious. He is a fellow of the American College of Tax Counsel. It is a very big deal. You have to be invited to it. There's a 15 years you've got to be involved in, tax and everything he does to be a part of that right there. I wanted to highlight. And I know you're super humble, but let me keep bragging on you a little more to my friends. And the last thing, former chair of the executive committee of the Connecticut Bar Association tax section. But also you have the podcast and you're a family guy and you have tons of friends and I've met quite a few of them who rave about who you are as a human, and that's why I am so excited to be here with you and honored that you asked me to be on, because people like me are all out there with no idea of what they're leaving on the table. And I want to be able to show my friends and family and fellow independent contractors and entrepreneurs that there is money on the table for you, that if you set this up with Eric, with what we have coming on the 27th, you then can go take that family vacation or go invest in something that's going to set you in a good place, but don't leave that money on the table. It's too significant, and this is an amazing program that you've set up. So I want to kind of finish this out with a few things of you just telling everyone what does it look like for an investment in time, and how can they get into the information at the end of this so that we can set them up on the right path to get that money back in their pockets.
so yeah, I mean, if you have an entity already, a corporation or an
Right.
LLC, This is not a big deal. It is an election made with the IRS. It has to be made within 75 days of the start of the tax year, or it becomes effective for the following. So let's say you file this election now in August of 2025. It would be effective January 1, 2026. So you would still be your single member LLC or whatever it
Right.
is you are now for this year. And then starting next year, you would be treated as an S-Corp. Um, you do have this reasonable comp for payroll, but like everything else, could you run weekly payroll and pay for that? Yeah, I guess. Or what you could do is just simply run a fourth quarter payroll at the end of the year. But payroll for one person with one of the software companies is next to nothing. So the biggest thing is to make sure you do it. All right.
Right.
And by the way, if you do go and sign up with one of the software companies, please make sure they're going to file the W-2s, W-3s. Sometimes it's an election, and I've had people decide to save a few bucks, and then they don't file it. There are
Mm.
penalties for not doing that. So in our getting all these tax savings, we don't want to offset them with penalties if we
Right.
do this properly. But yeah, it is a very simple payroll. Now you don't have to do weekly payroll. And again, just to reiterate, again, using that 150 and 70, if 70 is your reasonable comp, don't that's not what you're going to take. You're going to take the whole 150. It's all your money. It's simply how we report it to the IRS. 70
Right.
in that case, that person's case, 70 would get reported as a W-2. The rest would be what are called dividends that would flow through on what's called a Schedule K-1. The whole 150 hits your return, the whole 150 hits your bank account. All right.
Right.
It's merely a matter of reporting to the IRS, but those savings are significant.
And let's say there's someone watching who's like, my side venture right now, Danielle has brought me in 12 grand this year, 15 grand. Maybe next year it'll be 30. I don't know. Maybe it'll be 5,000. Is there an advantage for them to still set this up? And is that a smart thing for them to do?
Well, what I would do is inevitably what we would do is run the report. And here's why.
Okay.
Let me tell you. So I started my side venture, I think you said, made 12 grand. Well, how many hours? Remember, I told you you go in and you do a little interview, and let's say that person came up with 70 full time. But
Right.
if you said, well, look, I'm spending about 5 hours a week, well, that's 1/8 time. So that 70,000 reasonable comp might be for a full-time person, but you might find that reasonable compensation would be 8 or 9,000. So
Right.
12, the savings aren't great. But once you get to 15, 20, 25,
Now
again,
you're saving.
times 15.3%, you're talking now you're saving 3, 4, 5,000 a year. Once you get up, where you're 60, 70,000 in savings, it compiles.
That's
So
perfect.
yeah.
Yeah. So those of you who are listening and are like, I'm not at that big level yet. Do it now. Don't wait like I did. I didn't start doing this until I had already, had a big, big income coming in. And I look back and go, all those years, the compound effect of what could have been saved, a little more, then a lot. We have years that we've had robust income. We've had years where, everything waxes and wanes, especially for an entrepreneur when you're commission only and you're an independent contractor. But this to me is hands down not only the guidance that I was looking for, but to have it in this simple format and just here, go to the software, plug it in, easy and just simple. And you don't want to go hire someone and spend thousands when this system that Eric has put in place is really amazing. So what are they going to get for on the 27th? And let's close it out with giving them where the link will be so they can get more info.
Yeah, so we'll put the link in the description below. September 27th. We're going to spend an hour and walk you through in detail how this works. We'll give you the link if you want to go get the report. We are negotiating a discount on that.
Yes.
So people who are, people who look at this and say, you know what, this is an opportunity, can run the report, save some money. And then based on that report, it will highlight the savings fee. Now, if at that point you're like, this is great, go talk to your CPA, your EA, bring them the report, and they can help you. If either they are not comfortable helping you, the whole S Corp thing they're not comfortable with, or you don't have that person, you're somebody who's been going to an H&R Block or trying to do it
Right.
yourself, Um, no offense, being doing civil criminal tax as long as I have with Tax Rep Network, we have people all over the country. I can refer you to somebody, all
Yes.
right? And who can help you get this set up properly, make sure you've checked all the boxes, everything is in place. So again, not only are you getting the savings, you can sleep at night. You're not worried about, I hope I don't get picked for audit. In fact, honestly, I hope I get picked for audit because for the first time I can go, ha ha, right? I,
Exactly.
take that auditor.
That's
Um,
right.
so no, I think that what we're going to do is give everyone an education so they go into this eyes wide open. They understand the opportunity, they understand the savings. Um, and again, done properly, this is, I'm going to take that person again, that client that came in. So yes, we can do the S Corp. So we have to convert them, his LLC to an S Corp. Not a big deal. Simple
Right.
filing, track that, all that. So it's done. Now you have the tax savings. But to maximize that, let's put that into a profit sharing plan, right? So now we can decrease the taxable income. We can put that money aside. So now we're saving the self-employment tax. We're also saving the income tax, and we're going to let it compound. And this way, if I told you I can save you money and get you $250,000 a year from based on the taxes you would have sent to the government, not take a pay cut.
Right.
I've yet to find the person that says, you know, nah, give it to the government. They need it more
I'd
than I
rather
do.
just give it away.
Yeah, no, fuck that. How do I get this, right? And again, I just, in defense of all the accountants, the comment of, well, why didn't my person tell me about this? I used to say, well, I don't know, you have to go ask them. And I'm probably causing a lot of heartache for people. But what I've learned is, well, okay, when you pay them for that year-end consult and planning, do you go over this? And they're usually like, oh, I don't do any of that. Well, you've established a relationship that is basically you just want a return done. So you're getting
Right.
what you pay for. Now, if you've tried and your accountant isn't interested, time for a new accountant.
Absolutely. There's a scripture I love. It says, and I teach this in my mindset all over the world, which is, people perish for lack of knowledge. What that really means is not that you literally die from lack of knowledge. What it's saying is you without the knowledge, you can't apply it to your life. When you have this kind of knowledge, you apply it, you see things become better, right? And so the knowledge that Eric gave me and my husband and that we learned from him took the steps, didn't take too much time, didn't take a lot of money out of our pockets, but in doing that, that knowledge gave us the ability to have what? Additional income that normally would have went right to the government. And so for us, we're like, this is a no-brainer. So I've got a final question before we close it out. So I have a son-in-law who's doing great things in Miami. He's going to marry my daughter next year. I want them set up for success. The
Yep.
question is, with a realtor who's an independent contractor, who is he someone who also should do this? Is this for realtors? Is this for anybody who is a 1099 commission only? So I know thousands of realtors because of the business I do, lots of realtors. I have mortgage brokers. Who doesn't need this? Well, I guess is the bigger question.
The people so all of them should do this. The people who wouldn't do it is real estate investors. So
Gotcha.
let's say I own real estate. Real estate income is by nature passive. It's not subject to self-employment
Okay.
tax. So if you came to me and said, look, I'm making 250,000, I've got 25 rental properties, a 4 unit, whatever, blah, blah, blah. All right. I wouldn't do an S corp. It
Okay.
doesn't make any sense. Um, so for them, there would be other, we look at again retirement planning. Can you do a defined
Right.
benefit plan? There's all kinds of other aggressive planning, but an S corp wouldn't work for them. But other than that, or somebody who says, "Look, I own these LLCs, but I'm hands off. I'm not participating. I don't provide any services. I've got
Different.
a
Right.
manager in place."
Right.
You shouldn't be paying the self-employment tax anyway. If you are, you got to have a discussion with your accountant
Right.
because honestly, they may not even know that you're hands off. They're just going along doing the return and it is what it is because
Absolutely.
everyone's too busy and no one's paying attention. But other than that, no, if you're a realtor, the only thing with a realtor, make sure the real estate office is okay with paying your S corp.
Gotcha.
Some get a little weird about it because, well, you got the license. And now I can tell you, I have friends with Coldwell Banker and everything. They've done this. They had to jump through some hoops, mostly because of the compliance with the national office saying, well, you have a license, your entity now has to be licensed with the state, that kind of thing,
Right.
because they're paying an S-Corp.
Red tape.
But
Yeah.
but the other thing too, I do have a friend who's a realtor. I don't want to name it, the large national company did not want to do this, but his wife does all of his marketing, all of his blogging, all of that stuff. So he pays her a fee. She is in an S corp, so he's taking the reduction for all her services, and they're getting the savings that way.
Nice.
So I mean, a little creative planning, you can do this.
Well, I'm excited for the 27th, guys. And again, I've said it. Eric knows this. The taxes are not what I wake up and get passionate about like him, but he has really fired me up to be more savvy and to be more, have a bigger understanding of where we can save and how I can set my family up, my kids, my grandkids, so that when one day I'm not here, we've passed something down. I want to pass down to them the knowledge that I didn't get. And this is the man who knows best and who I could not be more excited for you to meet and today, and not only meet, but also on the 27th. That 1 hour, I promise you, is going to be one of the best hours spent this year to set you up for all the great things ahead. Because as we know, as entrepreneurs, there are many things that are blessings to be an entrepreneur, the time freedom and the, not answering to a boss. And then there's the stuff that we don't know that comes along, the heartache of the ups, the downs, the closed doors, right? And the slow seasons and having to self motivate. But I have learned as an entrepreneur, I don't want to make someone else rich. I would rather learn the ways to become the most savvy, not only investor and entrepreneur, but I want to know what am I leaving on the table? And Eric is our guy. And I hope you join us on the 27th. To me, that right there is the hour this year you'll spend and say that changed the game and what you ended up bringing home and leaving in your bank account instead of having to write a bigger check than you should have. And so I just want to say thank you, Eric. Looking forward to it. Guys, the info is in. We're going to put that right here for you. And we hope to see you then. We'll also be doing some other events together. Bigger stuff coming, much more to announce. This is the beginning of some really great stuff. And I just want to say thanks for having me on.
Yeah, no, thanks for coming on. Thanks everyone for checking this out. Again, I'll put the link in the description. The 27th, Danielle and I are going to open your eyes to some significant
Yes.
savings that you've probably been leaving on the table. So whether you're already been established for a while, you're actually just starting your side business, your entrepreneurial journey, you're going to get some great information. And I think it's not a stretch to say you're going to 10x your return on this.
That's amazing. Well, looking forward to it. Thank you again, Eric. And everyone, thanks for spending time with us. We'll see you on the 27th.
No, Danielle, thank you. Thank everyone, and see you on the 27th.